Hey guys, how are we doing? It's Crypto Insight UK here, bringing you back a new YouTube video. I've got so much to get into in this video. I'm literally just going to jump straight into it. I'm not even going to give you a preview of what's going on because there's literally too much to discuss. If you enjoy it, please like, subscribe and comment, share it with a friend. It's going to be a bit all over the place because that's where my mind's at, and I haven't included everything, by the way, guys. I haven't really looked into too much into detail of macroeconomics in this video. We're looking at longer term trends. We're going to start with the Bitcoin price action and just get straight into it now. So these vertical lines are the Bitcoin halvenings. If you don't know what they are, go and check them out on Google. I don't have time to explain everything in this video because otherwise it's going to go on forever, honestly. So what we're going to just look at first is time. Time is the first thing, and ignore some of the things that I'm talking about here, and we'll look at time. So from the first halvening in 2012 to the high in 2013, we had a 364 days for it to reach that high. From the second halvening on the 4th of July 2016 to the high in 2017, 11th of December, we had 525 days. So that's an increase of around 200-ish days. And so far in this cycle, the high that we've had was 546 days from the halvening on the 11th of May 2020. So what does this show? By the way, guys, in this video, we are trying to find out whether we should be short, whether we should be long, what the opinions are on the market. Is it obvious one way or another? And what I personally am doing, and what you guys should take from this is anything you want to take from it, add it to your bucket of things that you consider, is basically what I'm talking about. So we've had an extended cycle for the first. This is the first cycle, and the second cycle after that was much further extended, as you can see, with the increase from 364 days up to 525 days. With the third cycle that you could say we're in right now, to the peak, we've only had an increase of a further 21 days. So either we're slowing down the rate that we extend, or the cycle's not finished. And I'll leave that to you guys. We're just going for pure facts here right now, and then we'll get into some other stuff after that. So we're now going to look at price action from the previous halvenings to the top. So when on our first cycle in 2013, from the halvening to the top was a 9,500% increase in price. From our second halvening in 2017, from the date of the halvening to the top, was a 2,967% increase. On this third halvening, from the price action at the halvening to the top, was a 624% increase. So this would make sense in some ways. With elongated cycles and more adoption, as more money flows into the market, the cycles become less volatile as the actual market cap increases. Obviously makes sense. It's a lot easier to make high percentages when the market cap's really low. But does it indicate we're at a top? Again, I don't know. I think that they're conflicting pieces of information. I would say maybe we're at a top. But if you're going to say we decreased from 9,000 to 3,000, so it's a 3x decrease, you probably say 3,000 to 1,000%. So that would maybe be another, if we're looking from a 3,000 to a 1,000%, where would that suggest the high is going to come in? We would suggest, if we go for 1,000%, it would suggest a high in and around the $100,000 mark, which a lot of people are calling for. So there's that to put into the equation. One extra thing I want to talk about is a lot of people are comparing where we are here. They're calling for a capitulative event, capitulation. Let's talk about a few things to do with that. We'll start with previous again. So they're calling for capitulation because they're comparing it to what's previously happened. If we're comparing things to what's previously happened, let's talk about all possible outcomes, and then you guys make your own decision. On the previous cycle, when we had our blow off top for Bitcoin, which as we can see, we rallied up hard and then we had a big rejection. On this rejection, we saw a retracement rally of 51 to 53%. Okay? On this previous, so we rallied up, we've had our top. Where is this retracement rally on? Have we had a retracement rally of 50% anywhere? There's a 24%. Could you call that a retracement rally? I don't really think so. So, have we had any type of retracement rally at all? No is the answer. So that's one comparison that you can't make between now and 2017. And then, so we'll get on to the next point. And as I said, we're going to be skipping all over the place. I've got a million thoughts in my head right now. So people are calling for a capitulative event, okay? We've been sitting in this area here, and it's not nice. We've been in here for a long while. People's emotions are getting a hold of them. I completely understand. 126 days of absolute chop and not niceness, basically. And they're calling for a flush out, a capitulation, just like we saw back here in November-ish of 2017, 2018. And that capitulative event was a further 48%, 52% to the absolute bottom. All right? That's what it was. And we were in that bottoming out period for a further 133 days. So if we have that capitulation event now, so let's say it's a 48% drop from where we are right now, that would take us down to about the previous all-time highs. So people think, okay, that makes sense. You could use the previous all-time high as support. Cool, I've seen people calling for 20,000s, even less, 17, 18, 19,000s. Okay, fair enough. And let's say that happens. Let's just say it does. You've got 133 days down there before it reclaims. So we'll go to where it reclaims the price action of where it came from. It's actually 161 days that you have until you're back at the price before capitulation. So let's take 161 days from here. And I've got another few things that I just want to throw into this equation. 161 days would take us out to October. So if we capitulated today, we'd have 161 days and we'd be back up. Going on what's previously happened, we'd be back up at $38,000-ish. So what's your risk? Your risk is 50% downside, and then what's your reward? Okay, well, let's say you can hold all the way to the 50% depreciation and you're looking to hold long term. We then have this is an anomaly. This is a C19 crash. In my opinion, this is an anomaly anyway. But let's say it's not. Let's say we actually have the capitulation event and we do rally. Just remember that even in this time when we've had those 168 days until we get back to the normal price action, at one point after that you would actually be 116% up on your money, which would take us up to like $70,000, which would break all-time highs, which again would make it different to the previous cycle, but okay, doesn't matter. We just want to make a point here. If you held for 553 days, which is a long time, a year and a half from this area here where we're talking about this capitulation event, which if it comes, we don't know. In 168 days, you're going to be back to break even. At one point, you go 116% higher, still in this chopping range. At one point, then you come down back to 39% again. So you're still chopping. But then by 560-ish days, 546 days, we're at the halvening. And at this point here, you never come lower than your original level ever again. Ever. We haven't seen anything lower than 6,000 in this cycle. And do we see it? I don't know. I'm going to touch on something else in a second. So if you hold for 500 days from now, you're basically, the charts are saying that based on previous price action, we will never go lower than that price again. Ever. And right now we're at $38,000. So let's say you held here through the capitulation. We're at that capitulation event today, which everyone's talking about. Oh, we might be at that. Which I personally don't believe, by the way. Just let me get that out there. I don't think we are there, but you right now would be up 498% on your position, and you've never going to come lower again after the 168 days that you spent below. You have that chop actually, it's 500 days, and you'll never come lower again. So let me just take you through a few things that invalidate this. So we are at, if people are comparing this area here to a capitulation event that people keep screaming about on Twitter, I'm not saying it's not going to happen, by the way, guys. I'm just showing you conflicting narratives I don't think people have taken into consideration. And that's what this whole video is going to be about. So this is just price action to start with, obviously. So let's say we're in and around here. We've chopped, we're ranging. It's a different sort of range because we are actually ranging upwards here with higher lows. Here we weren't doing that. We were actually constantly setting some random higher lows or lower lows, and it's just chop and it's sideways and it's downwards and it's not looking nice. But it is a very similar-ish structure to what we're seeing now. But let's say we're here with the capitulation event. That takes us down, as I said, 50%-ish. 50%, yeah? And it brings us down to $3,225. Well, let's go back to the previous cycle before that. Where is this in comparison to the all-time high of the previous cycle? Well, this is the previous all-time high, and to the bottom, we're 160. It's 168% higher than the bottom of the previous all-time high from the bottom of the cycle in 2017. So the all-time high in 2013 is 167% lower than the low that you set in 2017. So that would suggest, let's say percentages are reduced by a third. There's only a third of percentages. So 167 divided by 3 is 5, like 50%-ish. So where's 50% of the previous all-time high? It's at 29,000-ish, 30,000. So even if you're going on percentages that we've multiplied or decreased by, we're not seeing a lower low really than $29,000, which we've already met, by the way. So maybe this area is this area. Maybe we're here. I don't know. I'm just suggesting things. But if we go on the same percentages, 167%, it's all the way up here. So that's invalidated. So that drop to come back to retest 19,000 is invalidated by the cycle before. So it's not possible in terms of saying that we're cyclical, and using that as an example is impossible. Doesn't mean it won't happen, it just means it invalidates the cyclical structure. So next, one extra thing I'm going to just throw into this mix is how long did it take from the previous high to set the next high? Well, we saw 1,477 days from the 2013 high to set the 2017 high. And then we see, so another 1,477 days, well, would be further out, but we've actually, in this elongated, these elongated cycles, we've actually shortened the time from the previous all-time high to the next all-time high. So from the 2017 all-time high to the 2021 all-time high, we actually shortened the cycle. So which one is it? Are we in an elongated cycle? Are we in a shortened cycle? Are the market cycles getting longer? Which I would suggest they are, because of adoption curves and the way that they work. And as I said, percentages and people coming into the market and staying in the market, I would suggest they're becoming less volatile and lengthening. So I would suggest that this wouldn't indicate the exact top. So we're just going again off statistics. Where would I suggest that might be? That is something up for debate. I don't know. But if you're suggesting that this top is 300 days or 200 days later than the previous top, maybe 200 to 300 days on top of that. So maybe like 500 days later, which would take us out to, so if we had 500 days to this, we could take us out to 1,900-ish days. So in and around here, March 2023 for the top, okay? So these are all things to be taken into consideration, and that's all on Bitcoin's price action. So all we've looked at here is history. Does it mean that we might drop lower or come higher short term? I don't know. Does it mean that I'm right? I don't know. Does it mean I even have an opinion on this? Not really right now. My opinion actually is that we will set higher highs. When that happens, I don't know. But now we're going to get into some further things not really to back up this thesis, because there isn't really one here. I'm just trying to show you that everything's conflicting at the minute, but all you're seeing in the market is hate and negativity. And what I'm trying to argue against is that the risk to reward is massively high right now, because we've already seen that even with a capitulation, the furthest down that we can come is 50%. And we're going to get into some of the potential price action that crypto can get to. So you're looking at a potential 50% from this portfolio dip. Potential, like, I don't even think that's going to happen, personally, because I think it's invalidated by what we've talked about before. And I also think that the network's too strong. But again, who knows? Anything could happen. Macros, we haven't taken anything like that into example yet, into the equation. But yes, if we do get that capitulation event, our charts are indicating that it doesn't come much lower than 50% based on previous price action. And if that is the case, we're seeing a 50% downturn for unlimited upside at this point because of network adoption, etc. we're going to get into. So that's my first point in terms of price action. And I've probably missed a few things because I've got so much going on in my head right now. But we're just going to get on to the next few little points. So we're going to go and have a look at what Will Clement is talking about. And he is a brilliant on-chain analyst, got 600,000-700,000 followers on Twitter. And he's talking about this. So this is another thing to add to the, are we going to capitulate, are we going to move up higher thought process. And he's saying here that long-term holder supply and the long-term holder cost capitulation, he's saying that long-term holder supply is increasing and the cost capitulation is decreasing, meaning that when long-term holders hold the crypto, I'll read out what he's saying. Very interesting dynamics going on the on-chain right now. Long-term holders' cost basis is dropping at the fastest rate in history, while their holdings are flat/grinding up slightly. This suggests an equilibrium of top buyers selling to other long-term holders or some sort of potential wash trading. So basically what he's saying is, I don't know what the time period is for long-term holders, but he might be saying that people here are probably long-term holders by now, and they're actually capitulating into the actual long-term holders, making the people who hold long-term, their average cost of buying the Bitcoin is a lot lower than it's coming a lot lower. Basically, that's what I'm saying. But also, what you can see from this chart, and this pink line is the interesting one for me, is when the long-term holder supply comes up and above the price action, which is the Bitcoin price is the black line. That is when we start to see a rally in price. Every time we get above, okay, we're above here, we start to see that rally. Okay, we can't really see the chart very well. Okay, we break above. Yes, we do stay a little bit lower, but the longer we stay above, this price action catches up, and at some point we cross over. We come all the way down for the long-term holders. That marks the top. We start to come back down again. The long-term holders buy back into that fear. Okay. This is the area that we looked at on the Bitcoin chart. That 50% drop. Long-term holders are accumulating heavily. We start to push out of that range. Long-term holders sell, and then again, the price action comes down. Long-term holders buying. This is the C19 drop. Then the price starts to rally up. We find the equilibrium in price again in and around here, start of 2021. Long-term holders are selling into the first top, and then the price action drops. China banned Bitcoin. We rally up. Oh no, China banned Bitcoin here. This is when Elon Musk went on the B word. Then the price starts to rally up, and long-term holders actually buy all of this. They're buying all of this price action. So, based on previous price action, we should start to see the price rally up and at some point cross above the long-term holder supply, and that will indicate when we get towards the top. Potentially. That's what the past has indicated. So now we're going to get away a little bit from price action, and we're going to talk about a few other things, including obviously network adoption and a few thoughts on the space. We'll start with this from Squawkbox. I'm going to play you a few little. It's from Paul Tudor Jones on Squawkbox. I'll play this now, and then we'll get into a few little things.
Well, actually, here's what I was going to start out by saying. If you ignore Paul Tudor Jones, ignore him at your own peril. And you may not always be right, but you were Druckenmiller. I mean, there's not many guys like you. So, I mean, I really want to hear your answer on this because I'm bullish on Bitcoin. I don't see how I can be.
Yeah. So
the question is, it's hard not to be long on Bitcoin, basically.
First of all, thanks for the question. It's a great question. here's what I see. I see this generational divide, and it's a digital divide. And unfortunately, Joe, you and I are probably on the other side of it, though I think we're both scrambling as fast as we can to understand it. If you look, and I see it all the time in our quant groups, I see it all the time in my kids' friends. If you look at the smartest and brightest minds that are coming out of colleges today, so many of them are going into crypto. So many of them are going into the Internet 3.0. It's hard not to want to be long crypto because of the intellectual capital, just the sheer amount of intellectual capital that's going into that space.
And that's basically the point that he makes for the whole video. So this is where I'm really going to get onto my opinion on the market, because we talked about short-term price action there. We've talked about whether we could set a higher high. I personally believe Bitcoin can set a higher high this cycle, and if we use Fibonacci retracements and extensions, we do look towards the $74,000 range for Bitcoin. Do we see that and then a correction? Has the market changed completely? Have we started to see institutional adoption with regulation coming through, countries adopting Bitcoin that may invalidate those 4-year cycles completely that we've talked about? I don't know what the answer to that is. I'm going to tell you now that my thesis is long-term crypto is a great bet, and in and around these prices is a very, very good risk to reward opportunity that, again, we're going to just explain a little bit further than this. So he's saying that the best minds of people graduating from colleges now, universities, are going into crypto. What is that going to tell you about long-term price action and appreciation of this space? If we continue to value things in money the way that we do at the minute, then that will appreciate the price, because that is where the great brains are. That's what he's saying. And we're going to get into a few other things. So let's get on to the next little tweet. Okay, this is Raoul Pal. This guy's mind is brilliant, because the way that he talks about things, he just explains things from a really step back perspective, like an overall holistic view of the market. Let's listen to what he's going to talk about here first, and we're going to break into that then.
It is an unbelievable time. The world has never lived through a period of time of Metcalfe's law adoption curves on top of Metcalfe's law adoption curves, creating Reed's law, which is a ridiculously powerful moment in time. We've got this aging population. It's creating tremendous fear because the rate of technological advance is so dramatic. We've never lived anything through it in such a short period of time. But you want to own that bloody stuff. You don't want to fear it. And I see people on Twitter all day. It's like, oh, Cathie Wood, these people are awful. Who wants to own a Tesla? You're fighting the biggest logarithmic trend we are ever going to see. That is the opportunity of a lifetime. So I want to be a buyer when I see that the inflation story goes away. I'm looking to buy growth. And in fact, it is an unbelievable.
And right there, he's talking about technology, specifically like ARK Invest, like all these sorts of technology companies, including crypto, in the technology bracket with Tesla and all these sorts of things. But the point of this is, and this is what I really want this point of this video to be, and it's not come across yet, but we're going to finish off with that, and I'm trying to surmise everything so you guys can see how I think. Is like, what's our downside risk is 50%. It is. I can see it. I understand. I get the risk. I understand. But our upside potential is unlimited. Don't underestimate the upside potential of this. As he said, it's a once-in-a-lifetime opportunity, and he's talking about tech, and tech includes crypto. And we're going to get into exactly the statistics of it in a minute. But guys, this is a once-in-a-lifetime opportunity. And I try so hard. Like, it always makes me feel emotional, because if we have a down, if I say, oh, this is where I'm investing into crypto, and then we see a bit of a downtrend because it's a volatile asset class, an emerging market, the charts are like this. So you can be the best TA person in the world. We're getting regulation coming in here. We're getting it banned here. We're banning proof of work mining. We're doing this. We're doing this. Everyone's trying to figure out what the hell is going on. How do they piece all of this together? If you look at the trend of the market, it's like this, guys. And it's up. It's up. And loads of people on Twitter, sell this, do that, do this, I want to get clicks, so let's FUD people who are emotional, who've been holding crypto for the last 55 days and probably 20, 30, 40% in the red already, could see another 20, 30, 40, 50% downturn. Let's get them to sell. Guys, this is the biggest opportunity of our lifetime. It is the biggest opportunity of our lifetime. Listen to what is being told here. You can see it, and we're going to break it down a little bit further, but I can't get across to you how much of an opportunity this is. And short term, like worst case, absolute worst case scenario, which we could have seen invalidated, we don't know, it might not even be true. Worst case scenario, which I showed you at the start, you hold your crypto for 500 days and it will never be lower than it is right now. That's what the charts say. Worst case scenario, you hold for 500 days from here and you will have upside forever, is what it says. Whether we even come down, we don't know. No one flipping knows. No one knows. But what we do know is long term, it's going up. And when you see it at a price like this, exposure is just king. Exposure is king to an exponential growth curve is what I'm saying. Okay, let's go. Next. So we talked about Metcalfe's law and Reed's law. I'm going to show you what they are. Metcalfe's law and Reed's law both are applied to network adoptions. So this is Metcalfe's law. The value of a network is proportional to the squares and the number of users. So one connection to one connection makes two connections. If you have then 3 people, you get 3 connections. 4, you get 1, 2, 3, 4, 5, 6 connections. You get 5 people, you get 1, 2, 3, 4, 5, 6, 7, 8, 9 connections, and 12 connections. Well, all of a sudden, I don't know, I don't want to do that math right now. And then we're going to add that to, so basically what it's saying is, the more people that come onto the network, the more connections are made. It's like a mobile phone. If you have 2 people in the world with a mobile phone, they can only call each other. When a third person comes in, there's a third person they can call. And this is how networks grow so fast. And then we've got Reed's adoption curve, which is pretty similar, but basically says that the same thing happens, but also subgroups are created inside of that, which is a lot easier to be displayed here. So this is Metcalfe's law, like we just showed you. They all connect to each other, but then when you've got Reed's law, and then it's basically saying sub-communities are created here, which makes growth happen faster, basically. So why is this important? Well, and why is crypto going to grow faster than things like the internet? Well, let's get onto that actually right now. Let's go. We'll start here. I basically think, and this is another point that I want to make, and I'm just, as I said, I'm just splurting at you guys here. I basically think the crypto asset class will be worth over $200 trillion at some point in my lifetime. And this is why, from Anthony Pompliano.
We are going to tokenize the world. And the whole idea of this was every single stock, bond, currency, and commodity will be a digital asset. And there are a lot of people, specifically in the Bitcoin community, they didn't like that. Because their whole thing was, it's shit coins, it's scams, it's all this stuff. And my position always was, it doesn't matter where it's ultimately going to happen. It's going to happen. So sometimes it may happen on Bitcoin. Sometimes it may happen somewhere else.
Very useful.
So again, a huge statement there from Anthony Pompliano. Going to tokenize the world. And it sounds ridiculous to say it like that. And people who don't understand crypto might even think that's ridiculous. Some people watching this video might think that's ridiculous, but it's not. If you think about what crypto is, at a very basic level, it's just a software upgrade. It's going to make things faster, more reliable, cheaper, and transparent. And it's coming. It's here. Whether it's here today, tomorrow, 6 months, a year, 2 years, it's coming and it's already here. It's just how we implement it. In this world that we live in, all we want is something faster, something better, something cheaper. That's all we strive for. So why the hell would that not happen to finance? And that's why the whole market, the whole finance market will be ran on the blockchain. Maybe not necessarily the blockchain, one blockchain, but a selection of blockchains. Because they're faster, they're cheaper, they're transparent. Everything that I've just talked about there, they're secure. That's why. That's why this is happening. And we're going to finish with Raoul Pal explaining the growth curve, because it's something that I don't think many people have got their head around, because we get so caught up in short-term price action that this is something you really need to be paying attention to. I really do think, anyway. But let me just play. I've got 2 clips from this. We're going to discuss them, and then I'm going to finish up this video.
Finally, let's get into crypto. Crypto network adoption model. I've talked about this. I updated this chart a while ago. Most of you haven't seen it. The crypto adoption is now massively outperforming the internet. It's been growing at about 165% a year versus 85% for the internet for the same period of time now.
So it's grown at almost twice the rate of the internet in terms of year-over-year growth. Easy to flipping work that out, because you've already got the technology of the internet, which gives accessibility and connection to people all around the world. So all you're doing is laying another layer of tech on top of a layer of tech that already connects people. So obviously it's going to grow faster. Also, I don't talk about here because I forgot to get the slides up. 1.8 billion people in the world are underbanked. 75% of those people, so they've all missed out on this financial system. 75% of those people have a mobile phone, and they can be obviously included into the market cap that I talked about when I said that crypto is going to be a $200 trillion asset. But let's get back to asset class. Let's get back to Raoul Pal.
So this is the fastest adoption of any technology in all human history. We are going to get to 5 billion users by 2030, i.e. full-scale adoption of crypto as technology for the Internet of Value and a host of other things.
So by 2030, the whole population of the world, or 5 billion people, not the whole population, we're at 7 or 8 billion, I think, at the minute. The majority of the population is going to be using cryptocurrency. So within 7.5 years, we're going to see the majority of the population using this asset class.
1 billion users comes in 2024.
And 1 billion users, 2024. We're halfway through 2022, guys, a year and a half. The minute we've got about 200 million users, so that's 5x in a year and a half.
And that's by lowering the rate of growth again. I'm not assuming that growth stays as red hot as it has been. And in fact, growth has been slowing. So I think that is the magnitude of what is happening. And you can own this, unlike the internet. It's much easier to own because you own a share of the network by owning the crypto. The next chart.
And I think that's an important part. We have the opportunity to own part of this network adoption. And that's what crypto is. It's a network that's being adopted. And you have the opportunity, whereas we didn't really have that with the internet. We didn't have the opportunity to own a part of the internet. We had the opportunity to buy different centralized companies which ran on the internet. But we're talking about owning parts of the actual network right now.
Shows it in a more dramatic way, which is not on a log scale. And we're assuming the internet was growing at 43% a year from about year 6. Year 1 in this case, or year 0 in this case, is 5 million users. We took crypto and internet users at 5 million and then looked at their growth as they adopted. So after year 6, the internet was growing at 43% a year. So if crypto grows at 43% a year, it gets to year 10, which is 4 years' time, at 1.2 billion. But if it continues to grow...
So he's saying that in 4 years' time, we'd be at 1.2 billion if we compared it to year-on-year growth and we slowed it down to the same speed that the internet was growing.
At 76, which is a lowering of growth versus the 165% it's doing now, we get to 2.8 billion.
But if you proportionately lowered the growth, we'd be at 2.8 billion by December of 2025, which is 3.5 years away. 3 billion people. 3 billion people. Nearly half the population of the world in 3.5 years.
I mean, these are astonishing numbers. The world has never seen anything like this before. So whatever happens, whatever the trend rate of growth is, this is exploding. So my macro backdrop is massive.
So the next clip I just want to quickly show you is at 119.77. and this is where I want to finish off, guys, because it's kind of finishing off my thesis from before. Let's play from here.
So that's all happening as well. So let's go back to my favorite log chart. Here's the log chart of Bitcoin. Bitcoin log chart using the regression channel. One standard deviation oversold. That one standard deviation sold is as big an oversold as crypto as Bitcoin ever gets. So we should be buyers, not sellers. I mean, could it go lower? Possibly. Probability, no. So I think you'll be.
So you're hearing what he's saying? He's showing you a logarithmic chart of Bitcoin's price action from all the way from what? 2010? 2011? All the way up until now. Have we ever been further than one standard deviation oversold? Slightly. So do we drop any lower? He's saying probability possibly yes, probability no, because we haven't seen that in the past. So saying that again, it's a good buying opportunity right now.
You should be a buyer and a seller. We're looking for this inflection point of this, maybe the ETF, maybe the ETH 2.0 staking. That's going to change the dynamic of this market. And if inflation numbers are falling and growth is falling, you want to own crypto. Long duration assets. Here's the log chart of Bitcoin, just the recent price action. It's just sideways. Nothing's happened. I love a sideways consolidation. Sideways consolidations lead to explosive upside. Now, does it go lower, hit the bottom of the channel? Probably, possibly. Don't know, don't care. Because I'm in this trade for the long run, because the long run, you need to ride the exponential log channel.
And that is exactly the point that I'm making, guys. Look at all this FUD and hate in the market at the minute, saying we're going to capitulate, trying to get people to sell out of their positions that might have bought in here, selling at a loss, 20, 30, 40, 50, 60%. Whereas if you can hold through this emotion and through these periods, you can see that we're actually in a great position right now in terms of risk to reward. And I will trust one of the most successful macro investors in the world over some guy on Twitter any day of the week. And I'll leave you with this, guys. Any XRP holder in the chat, we've talked about Bitcoin a lot and crypto specifically here. XRP is my favorite asset in terms of risk to reward. I think that I don't really care what the narrative is. We've got the lawsuit, etc. But if we just show pure statistics and charts, this is starting from August of 2013. We saw a 4.236 extension to finish that ish, or well, there was mid-cycle in 2017 because we had two alt seasons. It took us out to we got above the 4.236, and we'll take that off now just so I can show you that it did complete that move, and actually it went on to set a further 1,200% high, which is all the way up here, and the second leg up. And we'll take this off and I'll show you what I'm looking at now. This is why I'm personally targeting 1310 for my high. The charts show 1340. Fair enough. I always try and get my sell orders in before where the actual peak will be, just to make sure they get confirmed. That's a 2,192% gain from where we are currently. And if we follow previous similar price action to what we did previously and add that extra 1,000% on, it takes us up to $182. Does that mean we're going to get there? I have no idea. But I'm targeting 1310 for my cycle high. I hope you enjoyed this video, guys. I know it was a bit all over the place. If you did enjoy it, please hit that subscribe button, like, and drop me a comment with any questions. I'm sorry it was a bit all over the place. To sum up, long term, right now is a great buy for crypto in my opinion. Will we see further downside? I don't know. Will we see appreciation at some point? Probably. If we're following the same structure as previously, if you hold for 500 days from now, you'll never see a lower price than what the current crypto price is right now. And with that, thank you for listening, guys, and I hope you enjoyed the video. Peace up, A-Town down, as I should say.